The biggest financial scam in human history is happening right now, and nobody is talking about it. I cover that and more in this episode of the Mayoral Podcast. Welcome back to this episode of the Mayoral Podcast, everybody. I'm your host, Matt Mayer. Before we get into today's content, please make sure you hit the like button, subscribe, and share with friends and family. So, I mentioned in the open, the biggest financial scam in the history of the world is taking place right now. And for those of you who've watched my previous videos, you're probably thinking, Matt, we know it already. You're talking about the fractional reserve banking system that we have in the United States and that's taking place around the world. Well, you're wrong. That's the second biggest scam in the history of the world. The biggest scam is the unfractional reserve, or non-fractional reserve, whatever you want to call it. The U.S. government has not had a reserve requirement for going on 4 years now. And this article right here from the Board of Governors of the Federal Reserve from November 27th of this year talks about how they are continuing that policy with having no reserve requirement. So from this article, the Federal Reserve Board on Monday announced technical details related to the reserve requirement for depository institutions, which will remain zero. So what's worse than fractional reserve? No reserves at all. So what does that mean for people in the United States and the monetary policy that we have essentially been under for going on 4 years? A lot of people were sleepwalking during that time frame, didn't even know that the reserve requirement was eliminated or was removed temporarily for COVID restrictions and a way to inject money into the financial system back in March of 2020. Well, they've continued that bad policy for now over 3.5 years. When we get to March, it's going to be 4, and they say in that article showing that they're going to continue it for all of 2024. So what is a reserve requirement? And for those of you who don't know, this is pretty basic stuff when it comes to the financials or the banking system, but I will go over that very briefly. Reserve requirements are the amount of cash that the financial institutions must have in their vaults at the closest federal bank in line with deposits made by their customers. In other words, the banks don't have to have all the money that their customers have deposited. They only need a percentage of that. And that's how this financial banking system has worked in the United States since 1913 at the creation of the Federal Reserve. Typically, you see percentages 20%, 10%, whatever it might be. Right now, it's at zero. And I'm going to show you an example of what that means. Matt, what's the difference between it being at 0% and being at 10%? Well, it's a hell of a lot of money that could potentially be pumped into the economy and creating the mass amount of inflation that we've seen. So further down in this article, I don't have it highlighted, but I will, just to reiterate my point, to prove to you that I was not lying. This is Investopedia, showing that on March 15th of 2020, the Federal Reserve Board announced that the reserve requirement ratio would be set to zero, effective March 26th of 2020. So as of late March 2020, we've been on a non-fractional and unfractional, whatever you want to call it. There's no reserve requirements for the banks. So you saw what happened to a couple of smaller banks, mid-sized banks in Silicon Valley Bank and in Signature Bank. Those banks collapsed for a couple of different reasons. The reserve requirement being one of them. They didn't have the reserves that they would need when there was a run on the bank. Now, a fractional reserve at 10% or 15%, that most likely wouldn't have saved them anyway. Their biggest issue was that they bought government bonds at 1.5%, 2%. And once the Fed hiked the interest rate, those bonds were worth basically nothing, because why would anyone buy a 10-year treasury bond that's yielding, 1.75% when they could go to market and get a 10-year bond at, say, 4% or whatever. It's been north of 4% for some time now. So that was part of the reason when it came to the liquidity crisis that they had, when they had to liquidate those bonds, they were not worth the face value. They had to sell them at a discount, ultimately leading to the downfall of those banks. What does it ultimately mean if these banks were to lend out all the money that they have? Is that possible? Can they do that? Well, the answer to that is actually yes. Even with the fractional reserve, they can lend out They don't actually have to adhere to it, but then they have to borrow money from other institutions. That's why the reserve requirement matters. So this is from Forbes talking about the federal funding rate. The Fed funding rate, and as it explains here, the federal funding rate is currently between 5.25% and 5.5%. Here's how it works. Customers deposit money at the banks, and those deposits provide the banks with the capital needed for extending loans and other forms of credit to their customers. Regulators require that banks and other depository institutions keep a certain percentage of their capital in reserve to help guarantee the stability and solvency. Well, when there is a 0% reserve, they are not required to keep any of that capital. And that doesn't even necessarily mean what people think it means. So if there is $10,000, if I deposit $10,000 into the bank and it's a 10% reserve, they can only lend out $9,000, which is true. But once that money is lent out to that customer and that customer spends that money, they spend it, and the person that receives that money then deposits that back into the bank, which most people do, then that counts as another deposit. So now they can only lend out $9,000 of my $10,000. They get $9,000 back. They have to keep 10% of that, which is only $900, and they can lend out $8,100 of my $10,000. I'll show what that means between a 10% reserve and a 0% reserve, and the numbers are literally astronomical. So right here, I just drew up a plain example. I gave the example of using $10,000 as the initial deposit. Let's say that that's all the money that there is in the ecosystem. I have $10,000 and I put it in the bank. In a 10% requirement reserve, they can then lend out $9,000. Let's say that you need to do repairs on your house. You borrow the $9,000 from the bank. You pay the general contractor the $9,000 that they lent you. That money was mine. Now, my account is still going to show, if I check online, it's still going to show $10,000, but they lent $9,000 of that out. So you give that money to the contractor then goes back to the bank and deposits the $9,000. As I was explaining, now they count that as a separate transaction. So essentially, if the money goes from A to B, if I deposit the money and the bank lends you that money, they cannot count that as another transaction. But if they lend you the money that goes from A to B, me to you, essentially, and that money goes from B to C, which is the contractor, and then C deposits in the bank, that counts as a new deposit. And they can then lend out 10% of that. Or I'm sorry, they can then lend out 90% of that, only having to keep 10%. So eventually, and you could see here from this chart here, at a 10% reserve, I did, and it's pretty simple, you check the math. After 21 times of them lending that money out, keeping 10%, lending out 90, keeping 10%, lending out 90, that $10,000 turns into just over $90,000. Now, this is going to be asymptotal to $100,000. Now, you're going to get closer and closer to $100,000 as more and more transactions off that initial $10,000, or I'm sorry, more and more loans are lent off that initial $10,000. Take 10% away from all those, eventually you're going to get down to where it's like $99,999.99. It's just going to never actually reach 100,000, but it's going to get very close. So after only 21 transactions, you end up with $90,000 in the ecosystem, but realistically, it's going to show $90,000 in people's accounts, but there's only going to be $10,000 backing up that $9,000. I'm sorry, it's only going to be $10,000 backing up the $90,000. Now, in a zero reserve requirement, you see this line here of the green, it's just slowly increasing because they're not required to keep any of it. In that case, if I put in $10,000, again, you can borrow up to $10,000. The bank doesn't need to have any of that money. They lend you the $10,000, you give it to the contractor puts it in the bank, boom, they got another $10,000 they can lend out. So essentially, this cannot, with 0%, it could go out until infinity. I look at it like a governor on a car. As bad as this system is, the fractional reserve system, it keeps the car tethered to the ground, right? The governor keeps the car on the ground. You can't go faster than 110, 120, whatever it might be. Now, it's extremely dangerous to be going that fast, but at least it keeps it on the ground. And you look at those rocket cars, those cars that do those drag races, and they're about an inch off the ground because the lift, once you go to a certain miles per hour, you see some of those cars, they're right on the ground, and then boom, they go up in the air and they come crashing down a couple of seconds later. Well, that's kind of what this is it is a car without a governor. Now it could just keep going into infinity, but eventually it's going to the physics of the lift is going to say, okay, there's too much money in the economy, and it's going to come crashing down. And that's ultimately what we're potentially looking at. Even with the fractional reserve, at least it was keeping it at bay. If we keep policies like this for much longer, we're going to be seeing this happening a lot sooner than even the most pessimistic people thought 5 years ago was even possible. So, and again, to illustrate my point, and I don't have this on my little chart here, but if you were to then do another 22 transactions after that, and a 10% reserve requirement, you'd get up to $99,000. So again, you're going to get closer and closer, inch closer and closer to that $100,000 mark. You're never really actually going to get there. You're going to get awfully close. So in 43 transactions, you'd be at $99,000 in that. And here, you would just be at your initial $10,000 plus $10,000 or $10,000 times 43. You'd be at $440,000 like that. And that just illustrates how much quicker this can get out of control. So that doesn't cover all of it because, like I said, and as I was illustrating with the Fed funding rate, banks can go under that 10% when that 10% or 15%, whatever that requirement is set at, they can go under it. They just have to borrow money from another bank, okay? So in a normal fractional reserve, which we're not in, we're in an unfractional reserve system currently, but when they go under that threshold of the money that they need, the banks with a access of capital can lend it out to them, and that's where the Fed funding rate comes in. So now if we had a, say, 10% reserve and the bank dipped below the 10% reserve, they'd have to borrow it from another bank at between 5.25% and 5.5%, as that is the current Fed funding rate. Now, with zero reserve requirement, they are not required at all to borrow that money from the banks. What is actually the point? I'm still trying to figure it out. What is the point of the Fed funding rate being at 5.25% to 5.5% when banks don't even have to borrow the money? If they wanted to, they could just lend you the money, and if they dip below a certain percentage, it doesn't matter. You can't dip below zero in your reserves. So I asked the question, why did this happen? And you look at here, you look at the 10-year Treasury note as of today. It is Thursday, December 7th as of filming this. It's at 4.113%, which means anyone who buys U.S. government debt is going to get a 4% yield on that for the next 10 years. And kind of how does that all play into the Fed funding rate and the banks? So the Fed funding rate is supposed to be part of the governor that keeps banks from overextending credit and flooding too much money into the economy. However, because the rate is high, they're going to charge you and me 7-8% for a mortgage. God knows what other percentage you're going to have to pay on your credit cards. There's so much credit card debt out there, and that correlates with the Fed funding rate. So all these high interest debts we are paying. The banks aren't paying any. They're not even paying that 5.25%, 5.5%. They don't have to. If it was 10% and they go below the 10%, it doesn't matter. They're not required to borrow anything under these conditions, under the zero requirement conditions. So you saw money kind of slow down in the economy because of the cost for you and me to borrow money being so high. So what does the government do? They have the Fed jack the rate up because they can't sell their bonds at 1-2% because of the amount of money that they flooded into the economy between 2020 and 2021. Now these foreign countries are able to buy this debt at over 4% yield for the next 10 years. And guess who's stuck with that bill? That's us. That's just even more inflation on top of it. So the banks are not required to borrow any money if they overextend themselves, but you have to pay 7.5%, 8% for a mortgage. And foreign countries are now getting a 4% yield on our treasury notes. So who's getting screwed ultimately is us. We're getting screwed both ways. We can't even borrow the money that we need because the cost of money is so great to us. However, it's zero to the banks at present. If you went to a bank and they had no money in the vault, none, they can lend you money because they're not required to have anything, and it would cost them nothing. They could just poof, make it out of thin air, and they're not even required to borrow at 5.25%, 5.5% from a local bank because they're required to have 0%, which they clearly would have if they have no money in the bank. So you then have to pay, again, you have to pay that crazy mortgage rate of 7-8%. Interest rates on revolving debt are even greater than that. Meanwhile, the government is collecting checks from places like Japan and China and other countries that are buying our sovereign debt. So not only are we paying for it now, but we're going to be paying for this interest on these bonds for at least the next 10 years. So they're given to us both ways, and nobody's talking about it. Nobody's talking about it. And there's no talk of changing it because most people aren't even aware of it. I'll be honest, I was sleepwalking through it too. I didn't realize that they had taken the reserve requirement down to zero more than 3 years ago, going on 4 years ago, and never changed it. Now, I knew that they did that initially. I never knew that. I assumed that it went back, and that was on me. That's my fault. But no one's talking about this whatsoever. This is a financial scam that no one has ever seen. We've never seen this in human history. And it's going to continue for at least another year. Inflation's going to be out of control. As soon as they lower that rate, the banks can just be lending like crazy again. They could be doing it now if they wanted to. They just choose to be inflating the number for you to pay 7.5%, 8%. Because they're not, again, they don't have to pay anything on this debt if they were to overextend themselves. And here, from Reuters, this is from October 18th. Foreign holdings of U.S. Treasuries in August hits highest since December of 2021, which, again, tells me that they are buying our debt when it's at this 4%. In 2021, they probably weren't buying any debt at that time. That was probably the issue and why the Fed started raising the rate. That, I guess, coming with inflation, they don't really give a shit about you. But that was their reasoning for it because they weren't buying anything in 2021 at 1.5%, 2%. Why would they? So the Fed jacks up the rate, and now instead of not buying any more sovereign debt from these foreign companies or from these for these foreign countries, they started buying the debt again when it was got up to 4%. So from this article right here, it says total holdings of U.S. Treasuries climbed to $7.7 trillion in August, up from $7.65 trillion in the previous months. Compared to a year earlier, overseas holdings were up roughly 2.8%. So again, costs us more money to borrow. The banks aren't paying anything, and which means they could just keep inflating the currency. Anyone who's actually going to borrow it, they don't have to worry about having any reserves, and they're just going to collect a high interest rate on us. Meanwhile, once we finally hopefully get inflation under control, which I don't know how they're going to do it if they don't have a reserve requirement, even if they drop the it's like, okay, if they drop the reserve if they drop the Fed funding rate, that would make money more accessible to your average citizen, which means more people would probably take out debt, which would then inflate more money into the economy, especially when there's zero reserve. So the banks don't have to hold themselves back. They could just, anyone who wants a loan that qualifies for it, here you go, here you go, here you go. They don't have to worry about borrowing any money from another bank. Meanwhile, while that's happening, they're just printing these bills out for us to pay foreign countries for the next 10 plus years. Because this is, I mean, it started probably at the beginning of this year when they probably started reaccumulating bonds after they let them probably fall off their balance sheet when they were yielding, 1.5% or whatever. So now they're going to continue to buy these bonds at 4%, 3.5% probably even for the next year or so. And we're just going to have to keep paying that. So it's going to continue on this problem that we have because we don't even have the fractional reserve, which was already a huge issue. So my point is, to everyone who's watching, the few people that do, make sure that you're doing something with your money, something that's going to be not financial advice. I'm not a financial advisor, but do something that where it can't be inflated. Go buy something rare if you have the opportunity, because otherwise they are just going to continue to steal your money through inflation and through their ridiculous spending policies in the federal government. So switching gears, kind of along the same lines, you got Joe Biden talking about how he created 800,000 manufacturing jobs since he took office. And then they fact check him. I love these. I love the community notes on Twitter now, because they fact checked everybody instead of the Reuters fact. I know I just showed an article from Reuters, but the Reuters, the USA Today fake fact checkers. This is actually from community notes, and they put links to the page themselves, and it's just calling them out. It's like it's close to $800,000 jobs. You know, it was 764. Okay, close to whatever. They're going to try to inflate the numbers. Not a big deal. But then it says, taking the October 2023 figure, it's 175,000 higher from February of 2020, the peak before the COVID layoffs. So it's more accurate to say that about 600,000 of those jobs were actually recovered from the pandemic, and 175,000 were actually created. So it's just great when you see these fact checks. I'm glad that Elon's got Twitter. It's made for a more fair fight between the left and the right, and the information that's being put out there on the internet. And speaking of the Biden administration, you got this clown, Alejandro Mayorkas, who is not concerned with the safety of the American people, but rather bragging about charging war crimes against an American citizen for the first time in the history of the United States. This is one of those things that you would think, if you are a functioning presidential administration, you would try to have swept under the rug. Like, this isn't something you would be bragging about on social media. I would think you wouldn't be proud that there was somebody committing war crimes that's an American while you're president, even if it's completely out of your control. Now, it says that this person was in Ukraine at the time, so like really completely out of the control of the United States. Essentially, I'm not gonna point the finger at Biden and Mayorkas for something that an American citizen was doing over in Ukraine under their administration. That's a little ridiculous. But I will point the finger at them for bragging about it and being excited about it, posting it on social media as if this is something to be proud of. You're prosecuting American citizens with an American citizen with war crimes. It just seems absolutely ridiculous. But again, the priorities of this administration, I don't know, they seem to have no sense of what their priorities should be, but they continue to do dumb stuff like this. And then you had this. This just happened on Capitol Hill the other day. It's a 3-minute video. I'll shorten it down because I just want you guys to see when I saw this video, I'm like, is this serious? Like, these people they're literally saying they have the exact same answers. It's like they rehearsed it right before they went on Capitol Hill. So here is the presidents of Harvard, MIT, and Penn, a couple or a few Ivy League schools. This is Elise Stefanik, the rep from New York, asking them about the anti-Semitic protests that have happened on their campus, and simply saying, if there's a call for genocide on Jews, is that anti-Semitic? And they all couldn't answer, but they all can help themselves, but deflect and make up some abstract type of scenario in which they don't have to answer the question. It's really quite something to behold. So I'll play the video. I'll cut it up for you guys. You only have to watch about 45 seconds. But here you go.
At MIT, does calling for the genocide of Jews violate MIT's code of conduct or rules regarding bullying and harassment? Yes or no?
If targeted at individuals, not making public statements.
Calling for the genocide of Jews does not constitute bullying and harassment?
I have not heard calling for the genocide for Jews on our campus. I've heard chants, which can be anti-Semitic depending on the context, when calling for the elimination of the Jewish people.
So those would not be according to the MIT's code of conduct or rules.
That would be investigated as harassment if pervasive and severe.
Does calling for the genocide of Jews violate Penn's rules or code of conduct?
If the speech turns into conduct, it can be harassment.
Specifically calling for the genocide of Jews, does that constitute bullying or harassment?
If it is directed and severe or pervasive, it is harassment.
So the answer is yes.
It is a context-dependent decision, Congresswoman.
It's a context-dependent decision. That's your testimony today?
If the
Yes
speech
or no?
If the speech becomes conduct, it can be harassment, yes.
Conduct meaning committing the act of genocide? I'm going to give you one more opportunity. Does calling for the genocide of Jews violate Penn's code of conduct?
It can be harassment.
Does calling for the genocide of Jews violate Harvard's rules of bullying and harassment?
It can be, depending on the context.
I will ask you one more time. Does calling for the genocide of Jews violate Harvard's rules of bullying and harassment?
Anti-Semitic rhetoric, when it crosses into conduct that amounts to bullying, harassment, intimidation, that is actionable conduct, and we do take action.
So the answer is yes.
Again, it depends on the context.
It depends on the context. It's unbelievable. These people, these are the higher learning institutions. This isn't just Jim's college or Bob's community college or whatever the hell it is. This is Penn. This is MIT. This is Harvard. And these people can't even say, she was asking specifically, not even specifically, just broadly, if calling for the genocide of Jews constitutes it as harassment. They couldn't even say that. They couldn't even say, yes, it does, but I don't believe what you're referring to was a call for genocide of Jews. They couldn't even say flat out that calling for the genocide of Jews violates their own policies of bullying and harassment. It's really, I don't know. I say this, I don't know if it's unbelievable anymore. It's just, I mean, it is what it is, I guess. Like the standards for which these people conduct themselves are so low that when you think that's lower than their standards, like you realize that the standards you had for them is so low that I'm not really that surprised. I'm just really not that surprised. Unbelievable. I guess, again, not unbelievable. So then, last topic of the day, there was the Republican debate the other day. I guess the fourth. I thought it was the final one. They said there's going to be more right before the actual primaries in February. So I guess we'll have to see these people go on stage again. I saw some highlights. I'm not really going to cover it on this show. There's plenty of other people that are covering it. I don't think it's even worth the time. Again, these people are running for second place. Maybe Vivek is running for some type of cabinet position within the Trump administration. Clearly, Trump is going to win the nomination. These people are just wasting their time, wasting everyone's time, especially Chris Christie. He shouldn't even be out there. Vivek, pretty much too. It's basically Nikki and Ron for second place. But it's just more of the same. Meanwhile, Trump goes on with Hannity, and and Hannity asks him, he's like, "Are you promised tonight you never abuse power as retribution against anyone?" And Trump doesn't even say that he would use it as retribution against anyone specifically. He just says, he's like, on day one, I would be a dictator. He's like, then after that, I wouldn't be a dictator. And he goes and talks about what he's saying when he's being a dictator. He's talking about closing the border, and he's talking about drilling. He's basically saying, I'm going to sign executive orders by decree of Uncle Trump, like the border is going to be shut, we're going to build the wall, and we're going to drill, okay? And then after that, he's saying he's not going to abuse power. Of course, the people on the left were saying that Trump said that he's going to be dictator day one. He knows, Trump isn't that stupid. He knows that it's going to be used, but it's going to get more people to actually watch the clip of him saying, he's like, I'm going to be a dictator for day one and day one only, and then I won't abuse my power. So here's a clip from the town hall with Hannity and Trump.
issue, though, because the media has been focused on this and attacking you. Under no circumstances, you are promising America tonight you would never abuse power as retribution against anybody.
Except for day one.
Except
Look,
what?
he's going crazy. Except for day one.
Meaning?
I want to close the border and I want to drill.
That's
drill,
not. That's
drill.
That's not.
No, no.
That's not retribution.
I'm going to be. You know, he keeps. We love this guy. He says, "You're not going to be a dictator, are you?" I said, "No, no, no. Other than day one, we're closing the border and we're drilling. After that, I'm not a dictator."
So that sounds to me like you're going back to the policies when you were president.
So again, the people on the left, I've seen a lot of people comment on this post, or not even post what Trump said, just putting out there that Trump says he's going to be a dictator day one. No. He said only day one is he going to be a dictator, and only with regards to closing the border and drilling for natural resources. But of course, they're going to post that on Twitter and Instagram and all the other social media platforms. Most people aren't going to watch it. They're just going to say, quote, Trump said he was going to be a dictator from day one. No. He said he's going to be a dictator on day one about two different policies. I try to be fair as I can be. Clearly a right-leaning guy. But if I were to see Biden say that, I'd be like, that's a nothing. Like, should he have said it? I don't know. Who cares? Like, he's like, if Biden said, day one, I'm going to be a dictator. I'm going to sign an executive order forgiving student loans and giving money to Ukraine or something like that. Whatever it was. Whatever left-wing policies that he'd want to support. I'd be like, okay, I don't agree with it, but like the guy's not saying he's like I'm going to be a dictator when I get into the office for my second term. So pretty ridiculous. But you know, this is why people are turning to independent media. I don't have very many followers, but there's plenty of people out there that do. I'm sure most of the people that if you've made it this long in the video, you've seen or you watch a lot of these independent media channels because they'll actually say, okay, this is what Trump said. Let's not lie about it. Let's not like disguise it and say that it was something that it wasn't. And on the same side, like if Biden says something a little bit off, I'm not going to jump down his throat and say, okay, this is like, I could tell what he meant. Like, and clearly that wasn't even like trying to like read between the lines of what Trump was saying. Like there's no reading between the lines of what he was saying. He's just basically saying day one, I'm going to get into office, sign executive orders saying drill, close the border, and that's what I'm going to be doing. Now, Hannity was asking him specifically to use it as retribution against a specific person, so Trump wasn't even answering that question. But again, it's going to be spun by the media that Trump is looking to come in and be a dictator. So just continue to ignore these mainstream media outlets. It's a dying industry. It's going to continue to die because of reasons like that. People don't trust them. They've been lying for decades. And with the advent of the internet and what's happened over the last, call it decade, basically since Trump has been in the limelight, is people have decided that like I'm going to look into this myself and not just read the headline and maybe a little blurb from the article and say, okay, this is exactly what Trump said or exactly what he meant. I'm going to go try to find the video clip, get a direct quote, whatever it might be. Again, doing their own research. And this is why, and a lot of people don't have time for that. That's why they turn to these independent media sources and say, okay, what was Trump actually saying? Let me see the actual clip from that. And people trust those sources much more than they do the traditional media sources at this point, whether you're from the right or the left. That's it for this episode of the Mayoral Podcast. Please make sure you hit the like button, subscribe, share with friends and family, help me grow the channel, and I will see you all in the next video.